Hello, everyone. Okay, let's get started with our webinar. And let me just make sure we are live on the Facebook. Taruna, can you hear me?
Yes, I can hear you. Hello, everyone.
Perfect. I am just still checking in. Is it live on Taruna? Do you see that?
I'm checking it.
Perfect.
Yes.
It's live?
Mm-hmm.
Perfect. Alrighty. Let's give a couple more minutes for everyone to join in. Okay, and I see participants are coming in. Let's see. Okay, I hope everyone is having a really good day. In Pennsylvania, where we are in Central Valley, it's kind of a really nice and beautiful sunny day today. Okay, so let's start the webinar and share my screen. Okay, hopefully everyone can see the screen. If you can see the screen, put a comment in the chat box so that at least I know that my screen is live. And I hope everyone can hear me well. Perfect, perfect. I see a lot of comments. Okay. Alrighty, so this is one of the most requested webinar, one of the topic that I have been getting lots and lots of requests from so many people. So this time we decided, okay, let's go and talk about what are the other funding options available. We did the poll question last time, and there were so many people requested on the Main Street lending as well as the other government benefits. And for those of you who have been talking to me or Taruna, you know who has been requesting for this particular one. So let's dive further in. And if anyone has any questions, it's the same housekeeping rules. You will see Q&A option bottom of your screen, depending on if you're watching this webinar from your smartphone or a computer. Put the questions in the Q&A and put the comments in the chat box. So that way we can differentiate it. And some disclaimer, little disclaimer before we dive further in. This session is educational in nature and should not be construed as a tax advice and may not really reflect the changes in the federal or state laws subsequent to the presentation date. We try to make sure our slides are up to date, and if something new changed in last few hours or probably last night, I might not have it updated here. Before taking any action based on this information, we strongly encourage you to consult with professional accounting advisor about your specific situation. All funding information added here was obtained from many different sources, and we cannot guarantee how long they will be available. The material in this presentation has been prepared by and is the property of KB Tax Divisor CPAs. All content, including images, impressions, are protected under the US intellectual property and trademark laws. So any reproduction or dissemination of any element of this presentation without prior written consent from us is expressly prohibited. This session is going to be recorded and may be rebroadcasted. So do not share this information. Do not share any of your private information which you might not want to show it to everyone. And of course, seek a help of a professional accountant who can guide you through every step of the process. Little bit about the KB team. At KB team, we have 30 years of combined experience. We are a full service public accounting firm, provide year-round advisory services, and we are tax savings experts specializing in hospitality industry, liquor stores, real estate industries, small businesses, and professional service providers. We are a team of business and strategic tax coaches, and our office is located in Central Valley, Pennsylvania. However, we have been serving clients throughout the United States. And let's move on to the next slide. This is a team of KB Tax Advisors CPAs. Half of our team members are not on this picture, but these three are our family mission to help and guide the business owners throughout their business journey. So it's me, my elder sister, my younger sister. We have team member who is in Australia. We have a team member in Maryland, in Pennsylvania, and New Jersey. So our team is located throughout the US, as well as outside the US. So how to financially survive COVID-19 with relief loans, taking advantage of new legislation and forecasting and budgeting in this new economy. This is one of the daunting questions that most of the business owners are having right now. We don't know how long this crisis will last, and that's a big part of what makes it so difficult. The uncertainty of knowing when it will end is a bigger issue than what we know, So here is a framework for key things that will happen over the next 3, 6, 9, 12, or 24, or maybe more months. We have done a lot of research on this and, referred to a lot of economic research done by the top experts in the industry. And this is a report that I'm going to share with you all. It's a research done by Morgan Stanley. And, this was done initially probably around March, April. But this report, I come back and refer to it again and again because this report is, has proven to be so true so far that March 20, April 20, 2020, we were expecting that the US will peak to the new cases, which it did. And, if I look at this report and, going to fast forward a little bit, we are talking about serology testing widely available by June. Well, as of this date, we are still struggling with the testing capacity. So, especially after the 4th of July weekend. And wave 1 returns to work, which we were able to return to work sometime in June, July. Wave 2 returns to work mid-summer, which I'm kind of a little bit doubtful about it, depending on what state you guys are. But, seems like we are a little bit behind on that. Potential vaccine for healthcare workers. We are expecting that it will be available early October or, between September, October, that the potential vaccines will be available. And when it is available, it is going to be made available first to the healthcare workers, in the first responders line. Now, it will take some time for this health vaccines available to people like you and me. And on top of it, if it is available, it is affordable. At the same time, what are the side effects of this vaccines? To be honest, I wouldn't even try this vaccine until there is a proven result. But putting that part aside, potential second wave of infections is expected in November 2020, all the way going through February 2021. And potential vaccines may be broadly available by March 21 or April 21. So even if this vaccine is available by that time, what I'm seeing here, and the whole reason behind showing you this report is, even though things might look normal, it might not really be normal, back to normal, sometime at least until the next summer. And I know we have majority of the participants in this webinar are the hoteliers. And those of you know, hoteliers, their main season to make money is the summertime. And whatever earnings you make in the summertime, people save enough of money to survive through the, winter slower months. And if there is no savings generated in the summertime, how are we going to be able to survive the winter months as well as the next summer season? And what it looks like from this particular chart, that there might not be profitable summer season next year either. So that's something kind of really stressing out. So moving on to, there are really two main types of people out there. People that are just overly pessimistic, doomsayers, that they think this is the end of civilization, and people that are wishful thinkers and believe there's no issue and we will be back to normal in a few days. You know, where would you say you fall at this point? You know, put it in the comment box. Are you a wishful thinker or pessimistic doomsayers? So which do you think that what kind of recovery that the economy is going to have? V-shaped recovery, the economy will bounce back quickly, or a U-shaped recession, the economy will come back, but it will take some time, or L-shaped depression. We are headed for a long-term depression. To me, it seems like more of a L-shaped depression. Let me see, I see the comments. Oh, okay, Jaydeep Patel, he's a wishful thinker. Yeah, I wish we had more of you. So we came up with another option. Let's assume things die down soon. This was a bit of an overreaction and daily cases start going down, you know, and we start seeing good results in next 1, 2, or 3 months, or things continue to get worse in the coming weeks. Daily cases and government restrictions go up over the course of 4, 6, 9, 12, or 18 plus months. You know, what would happen to you if this goes on for 1 month? Or what if this goes on for 4 to 5 months? Or even worse, 12 to 18 months. You know, per that chart that I was showing, the graph, it looks like it could very well be next 12 to 18 months. I'm reading this comment and it's kind of funny. I see that someone is responding that I think there is a W-shaped recovery. So yeah, that, you know, up to a certain extent, I do agree with you. W-shaped does sound right. This goes, you know, I mean, what would you do if this goes on for next 12 to 18 months, right? And we all really don't know where it's going to go and what kind of a recovery it's going to be. Either way, what should you do for yourself to be prepared if it's a 1 month or 18 months? That's the plan we as a business owner need to make. You know, whether it's 12 months, 18 months, we have to be prepared, right? So what we tell people, and as many of you know, when we are talking over the phone and the meetings, you know, do whatever you think you need to do to keep yourself and your family safe, whether that's from the virus and from the people in society, because a whole bunch of things are happening in the society when people are going through the stress. Do everything in your power to save your business, getting creative, pivoting to create new revenue, getting relief loans, taking advantage of the legislations, and forecasting cash to survive. The truth is, disasters have come year after year, and most people just sit on the sidelines and let the world happen to them. But right now, we are helping anyone affected by COVID-19 and navigate this unprecedented time. And this reminds me of the BP oil spill. Who remembers the BP oil spill that happened years ago? You know, when the BP oil spill hit, there was a tremendous uncertainty for the business owners. But there was a massive windfall of loans and even the cash payments that was available to the business owners. BP's total estimated settlement was only $53.8 billion. But COVID-19 is already more than 20 times that, with another bill on the way. As you all know, HEROES bill is coming in on the way. So you can imagine $53.8 billion with the BP's oil versus 20 times more with the COVID-19. It took years for the business owners to recover through the BP oil spill. And not sure how long it's going to take with the COVID-19. We need to make sure we submit a flawless, I think I'm skipping the slides. Okay. We need to make sure we submit a flawless loan application and take advantage of all the tax credits other incentives, deferrals, and manage your cash flow to get through this crisis in time. What is more important right now is planning, planning, and planning, and that also proactive planning, not the reactive planning. And how I got started, just a little bit about me. For those of you who don't know me, my name is Minal Babaria. I forgot to introduce myself earlier. How we got started with this? Well, we have been doing taxes and accounting for years. And when this crisis hit, I knew that business owners across the country are going to be absolutely crushed. I knew that with our background, being the business coach as well as the accountant, we have to do something to help these business owners. And we made it our mission to help as many business owners as we can with the tax and financial guidance. I see that many business owners that I talk to, they say, my accountant did not help me. To me, it feels like you got a coronavirus and your doctor is saying, I'm sorry, I cannot treat you. So what we are going to cover here is relief lending, new legislation, and COVID cash forecasting. So the relief lending, few of the first couple of relief lending options, I'm going to go a little bit faster because as most of you know it already. The order of priority for applications changes by the hour, but this is the order that we would recommend as of today. Is first you get the PPP loan, which is a forgiven, and most of you would have got it already. If not, it's still available through August 8th. EIDL disaster loans. Most of you guys who are in the hotel industry or anyone who has more than $300,000 of gross revenue, you should have received full $150,000 in EIDL loan. If you receive, a rejection letter or a denial letter saying that the economic injury is not substantiated or anything like that, disregard that letter. You need to appeal. You need to appeal for, the EIDL loan. I hear some noise. Does anyone hear that? Okay, hopefully it's outside. I'm sorry about it. So if your EIDL loan is denied or rejected and you did not receive full $150,000, you need to appeal because you are eligible for receiving $150,000 in loan. It is kind of really funny. I see so many business owners getting a letter from SBA saying that the economic injury is not substantiated. Well, those people working on the EIDL loan are merely a loan officer. They are not the CPAs and do not have any business industry knowledge. I have worked with so many liquor store owners, and most of them have received more than $150,000 in loan. So I do not see any reason why the hoteliers would not receive this loan. The third option, Main Street lending, which is what I'm going to dive a little bit deeper in my next few slides. And here is the Main Street lending option. Last time that we met 2 weeks ago, I did go over briefly on the Main Street lending. That time program was not open for borrowers, but this Monday or Tuesday, I don't recall it, but this week, Main Street lending program has been opened for the borrowers. And there are very limited number of banks which are participating in the Main Street lending. It's not like the PPP loan or EIDL loan, which is like maybe 2-3 page application. I have been talking to a bunch of the lenders, and the application is somewhere from 23 pages to 35 pages. And on top of that, they do require lots and lots of paperwork. Some of the information is similar to what you need for PPP EIDL, but it is much more beyond that. So the borrower will really apply for the loan and to the, whichever lender is participating, as well as they have the funds available. And then lender is going to submit the loan participation information to SPV. SPV buys 95% through the treasury, and lender retains 5%. The main reason why majority of the banks are not participating in the Main Street lending is bank is only funding 5%. 95% of the funds are funded by the Federal Reserve. And that's the main reason why bankers don't like to work in this, because their profit margin is very minimal. But in reality, bankers or the lenders are the one who has to take the application for you. And a Main Street Special Vehicle Purpose, which is the SPV, has the three different buckets. It's a new loan facility, priority loan facility, or expanded loan facility. The terms are pretty much similar, little bit change
Minal,
here. And
can you check, Minal, can you hear me?
yes.
Can you check your audio quality? It's we receiving some disturbance.
Yeah, you know what? I'm glad that you mentioned about it, because I was hearing that as well, and I thought it is coming from outside.
See if you can use phone instead of computer audio.
Give me a second. Is it any better?
Oh, it's still same.
Same?
Yes. Can you switch to phone?
Please excuse me for a moment, guys. I'm going to dial in.
Hello? Can everyone hear me now? Yes, it's very clear now. Okay. Alrighty. I'm so sorry, everyone, that you guys were having trouble listening to me. Okay. And do you think I need to go back a little bit, or we are good? I don't know from where you guys were having issues listening to me. You can recap very quickly. Okay, so I'm just going to recap a little bit. The main reason why lenders don't like working with the Main Street Lending Program is because 95% of the funds are funded by the Treasury and only 5% are funded by lender. On top of it, the application process is very extensive, and bank has to go through the underwriting process and everything. So what bankers are doing right now, they are giving priority to their current customers. I mean, where with the PPP loan, we were seeing the whole bunch of banks participating. Right now, with per state, I see maybe 3-4 banks throughout the whole state, or max some of the states like 10 banks which are participating throughout the state. And whoever is participating, they are only taking their current customers. We have been working with online lenders as well who are taking non-customers. So, we will talk about that in a few minutes. So Main Street Lending Program, just to recap on what we covered last time, and I know there are many people here who might not know the exact program. It's a 5-year loan terms, and size of a loan ranges from $250,000 to $300 million. Okay, this is not one of the forgivable loans, and the floating rates are granted on the interest. Principal payments are deferred for 2 years. Interest payments are deferred for 1 year, and it's not eligible to be forgiven. No additional grant advance will be granted for this program. Collateral is required, but personal guarantees are not required by the Main Street program, but may be required by the lender. With the PPP, majority of the banks were going with the SBA requirements. With the Main Street lending, Federal Reserve has their own requirement, but they are giving some leverage to the lenders to have their own extra requirement. So we have the Main Street Lending Program, and the other option that is available is the banks and other financial institutions. Now, before I move on to the next one, let me see if we can launch one of the, or actually, you know what, I'll wait for a moment. So the banks and other financial institutions and state governments, there are many programs with the state governments where they are providing grant as well as the assistance. Many of the grants that the state is providing is sort of like a PPP loan, but less extensive. And that money is something yours to keep as long as you are spending it towards the payroll, rent, and the utility expenses, stuff like that. You don't have to pay it back. And you know, there are some grants available through the local government as well. Our team has done a very well job on maintaining the list of each state as well as the county who are participating in different kind of grants. And then there are non-bank lenders. So these loans and their availability is changing every single day, but with almost all of them, we are required to have the same documentation, which is your completed application with articles of incorporation or organization, operating agreement, driver's license, business plan. Especially for the Main Street Lending Program, many lenders are requiring business plan as well. And payroll expenses verification documents, this is not really required for Main Street Lending, but it is required for the PPP loan as well as the forgiveness. Trailing 12-month profit and loss statement. This is required for the Main Street Lending. Most recent mortgage statements or recent statement, rent statements, utility bills, copies of last 3 years of tax returns, 2017 through 2019, or 2016 through 2018, if 2019 is not yet available or not filed, tax transcripts of the return, monthly sales figures beginning 3 years prior to the disaster and through the most recent month, forecast of what income and expenses will be during the period of disaster until normal operations resume, list of collateral to be offered for the loan, and 2019 financial statements. On top of this, I would add 2020 financial statements, because I do know for the Main Street Lending, I see many banks requiring 2019 as well as 2020 financial statements. Now, with the 2019 financial statements, with the Main Street Lending Program, what banks are requiring, either the audited financial statements, and if you are someone who doesn't get the audit done, then your final tax return, which has been filed. So this is kind of one more reason. If you have not filed your tax return, you need to expedite and file it. And biggest problem in getting this loan is getting a bank or institution that's actually funding, calculating maximum amount you can or need to borrow, getting documents together so there's no back and forth, getting documentation for the loan applications together fast, getting supporting documentation together fast, getting your spot in line when the program is open. Banks won't answer and they are not responsive, which all of you know. And banks have conflicting advice as well as conflicting guidelines. The biggest problem is all things are happening so fast that it is tough for the bank employees as well as team member on the bank side to stay updated with all the guidelines. I have been talking to a bunch of banks in last few weeks, over the course of last few weeks, and some of them, when I speak to them, they're like, I don't know, what is Main Street Lending Program? I never heard of it. My bank has spoken about it, but we are not sure if we are participating in it. Or even worse, they will try to sell me on something else, even when I don't want the other program. So a whole bunch of things. And if it is okay to get other loan programs for the bank, it's not an issue. But provided you are aware and fully informed of what you are stepping into, because you don't want too many debts. Honestly, I don't prefer too many debts either. But sometimes you have to take tough decisions to survive and to grow to the next level. I would not prefer to have something with 30 years of loan terms or anything right now, especially when the interest rates are higher and everything. I feel Main Street Lending Program might be really good because first 2 years, you don't make any payment. Third year, you pay 15% of the principal. Fourth year, you pay another 15% of the principal. And then the fifth year, it's a 70% balloon payment. And at that point, if you feel like in the fifth year, you can't really afford to pay, 70%, you can refinance. That time in 5 years, you can refinance. First 2 years, when there is no payment required, when you get to use that money now, the time value of money is higher right now. And the best part about the Main Street Lending Program, there is no prepayment penalty. So that's kind of really strong feature. Pillars of relief lending success. Complete and accurate applications are required. And of course, everyone have learned lessons on that. I've seen many businesses who either received a smaller PPP loan or who received a smaller EIDL loan, or they did not receive any EIDL loan at all. And they're still appealing with the SBA. So that's where it makes the difference. Getting the money right away when it is available. And that is only possible with the complete and accurate applications. Pivot to the best lending option daily, because lending options are changing on a daily basis. And for those of you who are our clients, you do know we reach out to you as soon as any lending option is available. You get notified by the email or a quick video from me letting you know what are the options available and how to get qualified for those lending options. Apply within the hours of bank or government changes. This is very important. We do have 2 clients who did qualify for the higher level of EIDL loan. One person got $500,000 full when there was a manual paper application. And the other person who was in a limbo got approved with the $500,000. And as the new program came in, with that particular person, because he could not get the documentation in time, he got only $150,000. But we had 2 people who were qualified for $500,000. And then SBA came back and said, no, you only get $150,000 for now. So one person got $150,000, other one $500,000. Determining how much you need and if you need more, because if your business is sustaining very well, I don't think it's a good idea to apply for the loan. Once you get the money, most important, how do you spend it? I speak with so many business owners, have no idea how to spend the PPP loan money, where to spend the PPP loan money. Yeah, of course, everyone knows the payroll, utility, rent, mortgage interest, all good. But if your PPP loan money is deposited in the same bank account where your business revenue is coming in, how can you separate out when you're asking for the forgiveness? There's no way you can separate the PPP loan money spending versus your all the other expense spending. So it's very important, have a separate bank account for the PPP loan. Statute of limitation on the PPP loan is 2 years, which means if there is something fishy, something doesn't seem right, an SBA or anyone can come in and inquire or audit your documents 2 years from now. And with the EIDL, again, it's the same principle. Have a separate bank account. Deposit your EIDL money in a separate bank account because there are restrictions on what EIDL money can be used. I was talking to someone 2 weeks ago, and he was like, I used my PPP loan money, 50% to buy stock and 50% to acquire new business. I'm like, okay. I'm like, people know it, that this is going to be, this has the high chances of getting audited. Or, when you apply for the forgiveness, you have to prove exactly where did the money go. Of course, if you're not looking for the forgiveness part, I think it's okay because then you're getting a loan at 1%, which is really nice. As well as the EIDL loan, you can use it for the payroll, rent, utility, inventory, anything that you would spend money in the normal course of the business, nothing outside the normal course of the business. So that is something, I would keep in mind. We are tracking a whole bunch of banks and financial institutions nationwide. We are monitoring which banks are accepting applications. which banks are not accepting applications, which banks are accepting new customers, the specific requirements, and getting them done fast. We were lucky enough that our vendor who was approving the PPP loan within the matter of hours, which was like, 3 hours or so. And on the last couple days before the program closed out, our lender was approving PPP loans in 1 or 2 hours. So that was really faster. Not to mention state and local loans, and we find more and more every day. Right now, something that is hot in the state of Pennsylvania, that Pennsylvania state is giving grant somewhere in the range of $10,000 to $50,000, depending on your business, provided your business revenue is less than $1 million. And just a few of the other grants and the loan options that are available. If I try to put down the list of all the states here, it's going to be a really long list. So just going with few of them, handful of them. As you can see, there is City of New York, San Francisco, Massachusetts, Florida, Michigan, Los Angeles, Denver, Chicago, Jade District, Old Town, Texas, Minnesota, Maryland. There are many more states who are giving the state and local loans. Many of them are giving grants, and those grants are completely forgiven, which means you don't have to pay back. It's easier to get those grants compared to applying for the PPP loan. At the same time, there is no forgiveness thing or anything. And the most interesting part, most of the states and the county programs that are available, you can get the PPP and EIDL, and on top of that, you can add this programs. And if you need more money on top of this, you can tap on the other programs. In state of Pennsylvania, they have about 3 to 4 programs. Some of them are grants, some of them are loans. And Maryland has a bunch of them as well. Texas has a bunch of them. Arkansas is missing here. There are many states which are giving out $1,000 for PPE supplies, especially if you're reopening business. You need mask and gloves and all kind of things, that face shield and everything. So, the county and the government or the state is actually giving you grants. The Arkansas was one of them, which was giving $1,000 per employee, and that's kind of pretty decent. So we are staying on top of this evolving loan features, qualifications, as well as the requirements. And what we are going to cover is the new legislation. Take advantage of new legislation to improve cash flow with the Family First Coronavirus Act, as well as the CARES Act. We did go over with the Family First Coronavirus Response Act in our prior session briefly. CARES Act, it's a never-ending act with the updates coming in every hour of the day. The 800 pages act, which was enacted in March 17, 18 something, I think by this time, all the dates are mixed. It has become more than 2,000 pages right now with all the interim bills and additions to it. And no wonder if not all the CPAs are supporting with the CARES Act requirement, because who has time to study this 2,000 pages in the middle of the tax season? As well as the interim emergency bill, which was about $484 billion. And the fourth one, which is about to come in, HEROES bill, which is still in the air, but I'm pretty positive it should be passed very soon. Take advantages of the new legislation to improve your cash flow. So if you got the PPP loan and you have already exhausted your PPP loan, and you don't qualify for other lending options, what you can do is you can defer 100% of your payroll taxes for 2 years. I do not really recommend deferring your payroll taxes, but if you don't have any other source available to get the funding and it is an issue for your business to be in existence, there is nothing wrong in deferring the payroll taxes. The only reason I don't really recommend about deferring the payroll taxes is because, if you default on the payroll taxes and you can't pay, say, even after 2 years, it does get reported on your credit score, and it could become the issue as well. So that's the whole reason. You can get up to $2,400 or $1,200 cashback rebate on your taxes, which majority of you guys have got. And whoever has not got, they will either look at 2019, 2020, or 2021 tax return to see if you qualify, and it will be awarded when you file your 2020 or 2021 tax return. Had losses in 2018, 2019, or 2020. Get cash back by amending your tax return and going back 5 years. I'm telling you, this is very powerful. When the Tax Cuts and Jobs Act was enacted, net operating losses carryback was ruled out. There was an error in drafting the law, and hence that was ruled out, and that option was not available. But now that is available. So if you had a net operating loss in the business in 2018, 2019, or 2020, this is the opportunity to amend your prior year tax return and get the refund. And not just that, we were working on one of the cases 2 weeks ago. That person had about $300,000 plus in net operating loss. We amended 2015, 16, 17, as well as 18, and still those losses were not recouped. That person ended up getting about $60,000 in refund and still have $75,000 to $80,000 of net operating loss to be recouped, which will be carried forward. So you are losing out on a lot of money if you have the net operating loss and you're not taking advantage of it. Employee retention credit of 6.2%. This is especially helpful for people who did not get any PPP loan or whose business is very new and they could not get the PPP loan because of that or did not have much of a payroll. You can start doing the payroll now if you never had a payroll before and take advantage of the employee retention credit. It's a little bit less complicated than the PPP loan. You get up to $5,000 per employee in the employee retention credit. Now it says up to 50% of $10,000. That's the terms of the CARES Act. But in normal layman person's language, it's $5,000 per employee. You can take money from your retirement up to $100,000 and do not have to pay the 10% early withdrawal penalty. I know this is something most hoteliers don't really like to put money in the retirement account. But, 401ks, those are one of the best vehicles. And the reason behind it, while you are funding it to the 401k account, you are getting the tax benefit at the same time. When you have to get the loan out of 401k, you can get loan very easily, which have to be paid back in three years. And then the sick employee payroll tax credit of up to $2,000 per employee per quarter. Employee retention credit, I don't think we need to go in too much detail on that. Yeah, this is the net operating loss example. Someone who have $225,000 of net operating loss in 2019, okay, this is a real case study, by the way, guys. $225,000 have to pay zero tax for 2019. Not just that, we are carrying back that loss to 2017, which is $100,000, which is generating $25,000 of refund. And then $150,000 we are carrying back to year 2018. And that is generating $31,000 of tax savings here. So as you see here, $150,000 was the net original income in the tax reported. They paid $37,500 in taxes. We carried forward $125,000 of net operating loss, and it generated tax savings or refund of $31,000. So overall, this person ended up getting $56,250 in refund at once, which is very powerful. And if there is any loss remaining, even after you go back 2017 and 18, you can carry it forward indefinitely, which is very helpful as well. Payroll tax deferrals and strategies on how to put this all together, right? I think, we did go over last time on this, doing side-by-side comparison of EIDL, PPP, as well as the employee retention credit and the Main Street lending. Then we covered on relief lending, we covered on new legislation. We are going to cover on COVID cash forecasting now. So what is COVID cash forecasting and budgeting? Well, so many things are happening with a lot of uncertainty. And this is one of the powerful tools that we recommend all the business owners. And the reason behind it, if you're getting a loan, you need to know how much to get, or you need to see with the cash available, how many days your business can survive, right? So our team, I don't know if you guys can see the screen, but I see the half screen on my side, can help you decide, when you schedule up the meeting with us, or when you are calculating it yourself, decide how much cash you have available and how much cash you would need for next 24 or 36 months. From today, 15 days, how long until we are losing cash profit every day if we are not losing it already? In next 60 days, we can decide how long until we have no more cash on hand, if that's not the case already by now. And then over the course of next 120 days, how long until you have no access to other credits, loans, and we don't even know, do I want to use any other credit, right? So that's the time we can help you determine what it can be for next 12 months, 24 months, 36 months, or 48 months, what it will look like without the cash. And with the cash, how do you forecast for survival versus growth? That's something we look into. How long our cash lasts before we hit a downward debt spiral? How long do I need to prepare for? How long until we have negative profits? If you are not already in negative numbers, this is something also need to think about it. How long until my cash runs at our current burn rate? How long until your access to all the credit cards and loans run out? And how do we extend your survival timeline as long as possible? What would it look like to reinvent in cost structure with lower expenses, new revenue streams, and a way to break even or even make more profit with the new model? That's something we need to think outside of the box, So day one, what we do is we schedule the strategy session. We help you, guide you, request the list of documents that is needed to determine the plan. Day 2 to 3, we kickoff call. Week 1 to 2, relief lending applications complete as needed. Determine if you qualify for any payroll tax credit deferral or any other aspects of Family First Coronavirus CARES Act that need implementation. And then week 3 to 4, COVID-19 forecasting, budgeting, cash management programs. And along this time, at the same time, we look into what are the state and as well as the local grants that you are eligible for. So the next step would be complete an application or schedule a strategy session. Now, before we go on to the next step, let's cover the questions as well as let's take some poll questions. Taruna, do you want to pull out the questions from today's webinar? Can you hear me? I can.
Okay, the most interesting question, is this loan forgivable?
Which loan are we talking about? The Main Street lending?
Main Street, I guess, yes.
Okay. The Main Street lending programs are not forgivable. It's not like the PPP loans. It's something, there are a lot of restrictions on what you can use the PPP loan as well as the EIDL loan. So, the forgiveness component does play a role. The restriction on Main Street lending program are not as strict as a PPP loan. Next question, please.
Okay, the next one is, can I get a Main Street loan if I already have an EIDL or PPP loan?
Okay. Absolutely, yes. If your business is suffering, so with the EIDL and PPP loan, you were required to show that your business is suffering through the disaster. In the Main Street lending, there is nothing as such. You don't have to prove your business is suffering through the disaster. So yeah, absolutely, you can absolutely get all three of the loans. But again, as I was talking in the webinar, first preference is go with the PPP, second EIDL, and third local, state, state and your county grant as well as assistance, and then number 4, Main Street lending program.
Right. Next one. Can I get a loan if my business has a negative EIDL? That's an interesting question.
Yeah, that is a very interesting question. So those of you who don't know on what basis Main Street lending program loan amount is calculated, it's the earnings before interest, tax, depreciation, and amortization. So even if your business has a loss right now, but if we calculate your earnings before interest, tax, depreciation, and amortization, it is a positive number. You do qualify for the loan. I'm going to end this poll result and going to share it with everyone. Okay. So I see, do you guys see the poll results?
I see the poll results.
Perfect. Yeah, I see more and more people are interested in how to use the EIDL funds as well as the tax planning strategies to save $10,000 to $100,000 on a yearly basis. We need to switch a gear a little bit and focus on these two topics in our next webinar, I guess. Thank you. And I'm going to do one more poll. And I have one question here from Jignesh. I would really appreciate if you all can give me some feedback on the webinar so that we know what kind of content to bring in, because there is a lot of hard effort goes behind the, on the back-end side, on our side. So Jignesh's question is here, can you get the EIDL if you had zero revenue because you were under the construction and will open in 2020? So for that, I would ask if it is a completely new business, or is this was a business which was in existence probably in 2018 or 19 in some shape or form, and because you had some construction going on in 2019, your revenue was zero. If that is the situation, you would qualify for EIDL based on 2018. Now, if you did not have any revenue at all, you are starting business from scratch in 2020, and 2019 revenue was zero, but your business opened before, before the pandemic was declared, which is March 13th or 15th, depending on what state you are in. Before March 2020, your business was in existence. Yes, you can get the EIDL loan based on that number, but the revenue is going to be much more less. And if your business came into existence after March 2020, unfortunately, you would not qualify for any EIDL loan. I'm going to end this poll and share it with everyone, and want to go over, thank you so much everyone for sharing the poll and doing this poll for us. We are offering the free strategy assessment for those of you who are interested in the Main Street lending program or in the tax planning strategy session. And my calendar is available once you go on this link. Taruna, if you want to post the link in the chat box, that would be helpful. You can go on this website and schedule a session. You will be asked some pre-qualification questions to help us prepare for our one-on-one meeting. And our next webinar is going to be on July 23rd, which is 2 weeks from now, Thursday at 3 p.m. Eastern Standard Time. And we will be covering something disaster-related benefits, Depending on the poll that we got today, people are looking for the EIDL guidance as well as on the tax planning aspect. So probably we will come back and cover on that. In the meantime, if you have any questions, feel free to reach out to us. And I really appreciate everyone for joining us today for the webinar. Thank you very much, and stay safe, stay strong.